Nasdaq 100 and Dow Jones both showed a very good recovery last week. Specifically, Tech 100 was the one which has recovered and record highs were achieved here for Nasdaq. While US30 lagged with the bullishness, but still it has recovered a bit and precisely achieved the zone at 39,200, which we have expected that is going to remain a stronger resistance. Now, coming week is going to be important. The Fed's meet and the FOMC, specifically the rate cuts are not expected, but the projections of rate cut is going to be watched, and any positive signs of it will definitely impact market. So how to profit from that? What is going to be expected? We can see with the help of charts and indicators. And with every update, I'll be sharing the trading levels and strategy for the coming week. So do watch till the end. First, we'll look into Nasdaq, followed with Dow Jones. Let's start. And yes, this is a weekly review. I do share twice a day updates and targets for the US indices. And subscribe to the channel and press the bell icon to get the notifications. Do like, share and comment, which is a great motivation and support. Join the free Telegram channel for live updates and join the channel memberships here on YouTube to support the effort. Let's start. On the 4-hour charts, we can see prices have consolidated strongly here. And we can see the last trading sessions, it was mostly in range bound, but I can see that there is slight bearishness, though it is taking support from the 20-period moving average. Now also, if you look at first stop here, then next stop here, the Nasdaq 100 has to trade first below 18,800 and then below 18,500 levels in order to confirm a reversal. Else you can see already it is trading near to record high. On the downside now, these levels here at 18,940, 18,880 is going to be a stronger support. And looking at the last few candles, it appears that there could be a slide in the very first session in the coming week. Stochastic dropping here, signs of bearishness. Look at MACD. This is crossed over here at the top and it is looking downwards. It appears that we may see bearishness continuing here for a while, and with Fed, possibility of a sharper drop exists, but we have to watch out how it behaves before the Fed, because see, if it goes to oversold levels, the chances of a recovery will also be there with the interest rate projections. The RSI is overbought. It is trying to cool down a bit. If you look at the daily, now look at the daily charts here. See, it has formed a support here at the 20-period moving average. See, and that point I have mentioned that there is a reversal sign, and precisely beautifully it has reversed. Now divide this into two, you can find out what preceded this reversal was couple of red candles, what followed with a couple of green candles, and then this is the zone in which it is trying to trade. So possibly from here we can see couple of red candles and then a sharper slide. For now, I will not treat this as completely bullish, and this could be a possible reversal sign for now. Yes, the Bollinger Bands have started to expand, but if you look at the last two candles, I can say that the body size has increased, though there is a swing here. I will wait for the next candle, specifically if it trades below 18,900, and then certainly you can say that the chances will increase that we may see it erasing all the gains till towards 18,700. Any drop below 18,600 can be a confirmation that a major crash can be anticipated or expected in the next few sessions from here, and then we can look forward to a sharper top. Right now I do not see much signs of it. It has to trade below 18,600, then only we can confirm that the prices have reversed. See, on the upside there is a stronger resistance is seen from the top of the channel, the bottom of the channel somewhere here at around 18,600, 500. Moving averages are trading with divergence, staying bullish. The stochastic is overbought here. Look at MACD. On the daily charts, the MACD is staying at an extremely elevated levels. It has again crossed over here for the buys here. So that also confirms that still the bears are not very much in action and are not putting much pressure on the prices to drop further. But yes, definitely the interest rate decision is going to be one key event which can take the prices, which can take the MACD for a stronger fall. The RSI is near to top, and if here also you can see almost symmetrical signs, so it can possibly drop. Possibility exists that we may see a reversal from the current, but the signs are not very much encouraging for the bears here. Look at the weekly charts. On the weekly charts, see, the last candle was a sharp dip. It has breached this channel. It has again achieved higher highs and higher lows, and see, it was putting the pressure on the Bollinger Bands to expand, but it is closed within the band. Next thing is, even if it tries to move towards 19,200 levels, then also the possibility of a drop will be there. See, it is already at the extremes of the Bollinger Bands, and thus the chances of a reversal will be high. Now, why I'm expecting a reversal here? One, certainly it is in extremely elevated levels. Second, it is coming at the backdrop of a stronger rise from the 17,000. In last 6 to 7 weeks, we have already seen a 20% appreciation, close to 20% appreciation. It does not mean that it cannot extend this bull run, but yes, staying outside Bollinger Band, this is one explanation that it can try to reverse. Second thing is, yes, it is an extremely overbought levels. Look at the third thing, the moving average 20 period, it is looking upward. The prices are trading with little divergence from it. Whenever we have seen such divergence, it always tries to converge. Now the 20 period moving average and the median of the Bollinger Bands are sitting at around 18,000 to 17,800 levels. Also, if you look at the move, see, last time when was the weekly crossovers here? This was the buy crossover, and this was way back in the last year, middle of last. Since then, the weekly moving averages are looking just upwards and continuing to trade. However, one thing let me share that right now the signs are not very encouraging for the bears. Yes, this is elevated levels. These are elevated levels. Yes, this is extremely overbought, but still, I can see that it is shying away from a drop. So it requires a strong region for the drop. If you look at the weekly stochastic, this is again the V-shaped recovery. It is back to overbought levels here. Look at the MACD here. This is one interesting thing. On the MACD, if you observe here, see, double top was seen, then a drop, and it is retraced. See, it is not yet crossed over. Remember, a crossover is what we have to wait. But since this is already at extremely higher levels, I can wait, or I can see that it should continue to diverge and trade bearish from the current level. Thus, that also confirms my expectation that there should be a drop ahead. Right now, the signs are not very encouraging. If at any point of time you see Tech 100 is staying below 18,600, 18,500 levels in the coming week, just stay bearish for the next couple of weeks or more, and we can wait for sub 18,000, 17,800 levels. RSI is rising, showing signs of bullishness. Coming to monthly. Now look at monthly charts. Already higher highs are done. And see, this is a greener candle which is in making. Also, there was a reversal sign since then. We have seen this bullishness continuing here. And if you look at, this is the channel in which it is trading. Where are the lows of the channel? Somewhere here at around 17,800. Also, if you look at from where this candle has started, from 18,500 levels. Thus, it is very important for Tech 100 to break below 18,500 levels. Also, if you connect the highs from the last two candles, you can find out that in fact 19,200, even if it tries to achieve, the chances of a reversal can be seen. But right now I can see that it has hit the highs, and possibility of a reversal will be very, very strong. The stochastic on the monthly charts is also remaining elevated here. The MACD, if you, this is the only thing which is signaling a continuation of the bullish momentum on the upside. Look at the divergence here. It is not showing any signs of convergence, suggestive of continuation of bullishness. But the look at the candle sizes have flattened. So yes, I will be definitely watch out. Coming week is going to be important, where the larger swings can also be expected. And if it draws on the downside below the support levels, a crash is what we can look forward to. RSI is rising. So now we have seen the charts and indicators. Let me give you the trading levels and strategies so that you can all trade profitably and comfortably. And before I give you the trading levels and strategy, if you want to learn this art of trading, be a part of my 31st mentorship batch starting Monday. Register yourself now, reach out to me for details. In this mentorship batch, I am going to share all the tools, techniques, strategies, and the trade setups with the help of which you can trade profitably and comfortably. You can write an email or you can ping me on Telegram, and else you can be part of my signals channel on Telegram, where we capture hundreds of pips and points in a single day, trading diverse instruments, including indices and commodities. So write an email or connect with me on Telegram for your queries related to the services. And those who had asked me to recommend a broker where you can trade all the global instruments, which offers a swap free account with the lowest spreads and no hidden charges, you can find the recommended broker link also in the channel and video description. First, let's talk about the level. I will recommend a buy at 19,020. Expect this to move towards 19,060 and then 19,110 levels. If Tech 100 is seen trading above this, you can say now there is a very stronger chance that we may see it hitting 19,200, 19,240 levels. But I do see that this should be a greater, once it moves beyond this zone, you can say we are looking for a stronger rise, taking it till towards 19,400 and 19,600 levels. Though I do not see that happening in my personal experience, I expect it to reverse. In fact, even if it's 19, 200, 240, the chances of a reversal will be very, very high. The next thing is where to sell. Now, see, it has closed the week at close to 19,000. Now, there are greater supports here at 18,970, 18,940, 18,900. Very, very good support is seen here. And then below this, we can expect it to get the next target at 18,850, 18,800. Once 18,800 is taken, then we can say that the bears are back in action. I will be looking forward to 18,700, 18,600 as the next target. And if it drops below this, just stay bearish. We are looking forward to a major drop towards 18,400, 18,000 levels in the near future. If not in the coming week, then possibly in the next 2 weeks. Yes, these levels are likely to be get achieved if it continues to trade bearish below 18,600 levels. Take your trades accordingly. Now let's have a look at Dow Jones. See, US30 on the 4-hour charts, beautifully I have mentioned that 19,000 or 39,000, 39,200 is the zone which you should be careful of. Hitting the zone, we have seen prices reversing. Now, though it is in the bullish channel, it is on the verge of a breakout. Remember, once it breaks out, it has to drop below 38,000 levels and the drop is going to be sharper. Right now, it is not suggestive of same. The moving averages have crossed over and this is a bullish cross, but this is just a 20, 50, 100 period moving average. And see, this is almost on the verge of a breakout here. If you see in the coming week, US30 trading below 38,600, you can wait for 38,400, and once it stays below 38,400, stay bearish and we will look forward to a drop below 38,000 levels. Right now, yes, it is still trading in this bullish channel. The zone here at 39,000, 39,200 is critical. Any rise beyond 39,200, just expect it to hit 39,700, 800 zone. Stochastic looking down. The MACD is on the verge of a crossover and this is a bearish cross here. And this could lead to further fall, but yes, it has scope for it to rise as well. The RSI is looking down, which is again sign of bearishness. Coming to daily, if you look at daily chart, see, first of all, double top here at 40,000 levels. Since then, it is almost trading with a symmetrical formation and it is trading in the box here. 38,000, 37,600 on the downside and 40,000 on the upside. It has to come out of this box. Now, also look at the daily charts. What has happened in last few sessions? It is traded in this bullish channel. It has hit the moving averages and the median of the Bollinger Bands. Also, now the 20-50 period moving average have started to converge, signs of bearishness here. And this is the first red candle. So now in the coming week, it is important for US30 to trade below 38,600 levels and then 38,400 levels. If these two levels are taken, then we can say that this is just the beginning, the drop, the retracement, and it will be the beginning of a down move again, where the prices might be seen trading lower below 38,000 level. If you look at the RS stochastic, this is also overbought, which calls for a pullback. But right now, if you look at it, is not always mandatory. It is sustained here. It can sustain, but right now it is looking downwards. Look at MACD. Now, this is very interesting observation here on MACD. MACD here is almost at the close to, you can say, neutral line and a convergence. See, it has hit the lows here and you can see higher lows, higher highs. So if US30 crosses over and trades beyond 39,200, consider that we may see in fact 40,000 and we can expect in fact it to move higher on the upside as well. So it is not necessarily that the break which we are expecting is going to be there. But yes, on the downside, if you look at the highs here, when it is bearish, it can hit the lows here which are far below levels. So we have to be watchful. The RSI has come to comfortable zone. Coming to weekly, look at the weekly charts, double top levels and a flat bottom. Also, I can see higher lows are seen here. And look at the couple of candles. Bearishness was seen and it is trying to now show a reversal sign. Diminishing bearishness, this could be a reversal if the prices are seen trading beyond 39,200. I will say that this is the time then you can say that US30 is turning bullish, and then I will again expect it to move towards 39,600, 700 and then 40,000 levels again. Yes, diminishing bearishness is one observation on the weekly charts, and then this could be a reversal sign, but not as long as 39,200 is not taken, we should not be treating this as bullish, because see, once it breaks out here, it is going to be a sharper red candle as well. The event coming week is going to be much of interest, because that will decide the direction for the next few weeks. The stochastic is looking down, suggestive of bearishness and continuation of bearishness. The MACD, look at MACD. Yes, it has crossed over at the top and it is trading with divergence. It has a lot much of room available for it to continue. Look at this, what has happened here. It can replicate here as well. And right now it is showing signs of bearishness as well. RSI has dropped, looking downwards. Coming to monthly chart. Now this is interesting. Look at the monthly charts here. If you connect the dots, see the lows here are so far connected beautifully. That is an observation you should mark out, because it appears that it has hit the lows, it has formed a tail, and it can try to bounce back. But there is a clause to it. Look at the double top levels, and the closure of the preceding candle was less than, the body size is less than half of the complete move, suggestive that the bearishness might continue. Next is, it has to drop below this zone, and then we can say that there is a fall awaited, because see, a reversal sign, one bearish candle, a type of, or you can say a pullback, but if it breaks here, it is going to be a sharper one. Right now I can say that it is not indicating that there is a break which you could expect. But look at the divergence of the price from the 20 period moving average. Where are the 20 months average at? 36,000 levels. Too much of divergence calls for it to converge. Thus, it can be seen that it can try to converge towards this zone before bouncing back. And the coming week is going to remain one critical milestone for it to decide the direction here. The stochastic is looking, the MACD here is still bullish, it is looking upwards, and it suggests that there is a little room for it to continue on the upside as well. The RSI is flat. So right now I can say that the signs for the bears are not very much encouraging, and thus it is very important for it to drop below the critical support levels on the downside in order to continue with the bearish momentum. Now we have seen the charts and indicators, and time for me to give you the trading levels. And now looking at this, yes, you can buy here at 38,840 levels, 38,920 first resistance, 39,020, or rather, yes, 39,020,050 is where we can see a good resistance here on the upside. Beyond this, I will be looking forward to 39,140 and 39,200. Now see, if US30 is seen trading beyond 39,200, the bullishness will increase, and then directly we can see it lending towards 39,400, 39,650. This zone, very good resistance is seen here, and then beyond that 40,000 levels, and in fact plus levels can also be seen here. If it trades beyond 39,200, the bullishness will definitely increase, so you have to be cautious of that. On the downside, where you should, I will recommend a sell at 38,740 levels, wait for 38,650 to be taken, and then 38,500 to be taken. If these three levels are taken, the bearishness will increase. I will wait for it to drop below 38,350, and then direct lending is to be towards 38,000 levels. Below that, 37,750, 800 zone will come into picture, the next stronger support here. If it drops below this, just stay bearish. There is a lot much of room on the downside, and in fact 36k can be anticipated in this month and in the next few sessions as well. So you have to be cautious and watchful for the coming week, specifically if it drops below 37, or I will say 38,500 levels, the chances of bearishness will increase here, and then we can look forward to a sharper drop, and 37,800 will come into picture. And on the upside, beyond 39,200, the bullishness will increase, and thus in between these 500 to 700 points, you have to trade with extra caution. Take your trades accordingly. Like, share, subscribe, and comment. Join our mentorship batch and signals channel. Reach out to me for your queries related to the services. Join the free Telegram channel for live updates, and join the channel membership channel on YouTube to support the effort. Thank you very much. Have a great profitable trading week ahead and a happy weekend.